local initiatives, decentralized cooperative systems, which had close proximity to markets and therefore were able to efficiently deal with the kind of market needs. The microcredit was given exactly to the kind of market needs that came up during that period of time. What are the preconditions for the effective working of such groups? And this is where we have lessons that we can learn from the German models. The corporates need to be supported by federations which ensure the functioning of the system. You see, it's not as if all was well with these microcredit organizations in Germany too. They had their own problems. For example, as I was saying, first Raiffeisen approached wealthy people to give charitable donations, which were then distributed among the rural poor in some fashion in order to be able to lift them out of poverty. But you know, charity is not a certain thing. Charity has its own uncertainties. Second thing, charitable models do not have anything to do with distribution. Somebody gives a charity, how is it going to be distributed? This is not very clearly mentioned. So therefore, charity, and depending on charity, Raiffeisen immediately found out was not a very sustainable model, which I'll be coming to. But what is then important is to formalize such informal credit cooperatives. And this is where, as a law and economics professor, I would always mention the fact that when we create laws, if these laws evolve from the social norms of the region from which we want these laws to, they will be better accepted. But if you transplant laws from some other country and kind of impose them on a situation which is completely at odds with these practices, then they won't be accepted very easily. You'll find ways and means to kind of move out of these laws. I told you about this charity, that's 1874. And what he did was he was bringing grain from non-affected areas of the famine. And within a few months, it brought down the price of bread by 50% in the affected areas. But as I said, charities is not a very sustainable model. And therefore, he established the first Rural Credit Association in Hedeshof in 1864. However, it did not take off. There was very slow growth of this process, this vision that Raiffeisen had, and it reached not more than 245 rural cooperatives by the mid-1880s. So there was something that was keeping back the growth of such associations. One of the things that it was keeping back was the fact that the liability requirements for repayments. What is the law or the rule of the game when you have these kind of cooperative credits associations? In the event of defaults, how do you establish the liability rules? Usually, as we are doing today, what he established was joint and several liability requirements. That the entire group was jointly liable for any one of them who was defaulting. That is called joint liable. Severally liable in law means that if one person defaults, you can always extract the amount from the others who are not defaulters to their fullest extent of the default. That's called severally liable. So a joint and severally liable law informally was established on these, but it did not lead to very high growth of these organizations. What was then required, as you would see, was that some sort of a support at a larger level, at a higher level, of legal institutions that have to come in and protect some of these borrowers and lenders from these kind of problems. The rural and urban networks of credit associations were then brought under the law, and this is where I emphasize that the rule of law is a crucial factor for economic development of any country. This is one small area in which law is so important. I explore many other areas in our country in which the rule of law is so weak in this country. And one of the main reasons why we are where we are today. I can give that in a nutshell to you, and that explains the paradox of why we are a rich country with poor people. I'll tell you that in a minute. I will unveil the mystery of this in a few minutes. The Cooperative Act of the German Reich, the first cooperative law in the world. It was the very first cooperative law. We never had cooperative laws in the world before this. And in Europe especially, this was one of the very first cooperative laws. As I said, the earlier system of repayment entailed joint liability of the borrowers. The case, as is the case with microfinance institutions today, and we do find problems with microfinance today. If you notice that there have been cases where borrowers have been harassed to an extent where they even committed suicide. And then these are reported in newspapers, and then they say, oh, microfinance has failed. Well, what's the reason for the failure? One has to look at what are the kind of rules of the game. And let me also remind you, our legal laws have not caught up with microfinance, even today. We are far behind in our legal reforms, which will take care of some of the problems of microfinance. And that is what Raiffeisen immediately found out when he had problems in Germany, and therefore sought to bring a legal support system to these kind of cooperative credits back in the 1800s. This was therefore, in that period, limited liability of the borrowers was established under the rule of law, even for small credit associations. What did this do? This little change in the law from joint several liability to limited liability. It proved to be a turning point, and by 1914, the number of rural cooperatives in Germany increased to more than 15,000. And in fact, there was no turning back from these rural cooperatives in Germany from then. And what are the reasons for the success? Several factors I can list out without going into the details of these. One of them is this self-help and self-reliance kind of a situation, which is based on savings mobilization of small self-help groups and the evolution of a legal framework. It can be done in these stages. 1838, the first Prussian Bank Savings Decree. 1889, the first Cooperative Act. Right? And very interestingly, 10 years later, India followed, and I'm coming to that. 1934, banking laws covering all financial institutions, including savings funds and cooperatives. Then abandoning the joint and several liability of cooperative members in favor of limited liability as a part of the Cooperative Act of 1889. Effective delegated supervision through own apexes, not by any other third party. Own apexes, the so-called auditing federations in Germany, are a part and parcel of the banking system now. But back then, it was the beginning of such federations. What did they do? They had their own system of auditing and their own system of creditworthiness of these associations by these federations that they created. We have no such system in this country. They are in turn supervised by the bank superintendent. We have here, who is our bank superintendent? The Reserve Bank of India, right? We can still follow some of these things, but if we go in the right way. Financial system in Germany was then therefore dominated by some of these former microfinance institutions. What I'm trying to say is, you start off with microfinance as a beginning but not an end in itself. And then this has to metamorphosize into something more inclusive. And therefore, a microfinance base, which is based upon the indigenous wants of the people, with their own self-supervision and auditing procedures, then becomes a larger body of banking system. Even today, you have the Raiffeisen banks in Germany, but they are not the same as they were in the 1800s. 39,000 branches, if you please, 49% cooperative banks, 51% savings banks, 75 million customers. This is Germany. Cooperative and savings banks divisions. 51% of all banking assets, 28 cooperative and 72 savings banks, And 64% of all financial intermediation was based upon these small associations that then grew into these banks. And this is a very old data. I don't have immediately Indian numbers, but I have a comparative of the way India's path went. That's what I would. Overall, I don't have, it will be, this is very old data, 1997 data. I have not really, I'm not doing work on banking, but it struck me that this is one thing that one can talk about in a conference like this where German-Indian interaction is there. Let's look at the Indian history now. That's all about Germany. The Indian history, a great start. Now, I'll tell you, there are very interesting things that, that come out. And the power that stands in the way of India's economic development is the power of evil finance. The land lies blighted by the shadow of the Mahajan, the moneylender. And who said this? Well, this was said by Daniel Hamilton in 1884. Remember, this is the British India that we are talking about. We are already in the British India period. Indeed, Sir Frederick Nicholson was sent to study the question of mutualist credit and mysteries of the system based on self-help by farmers themselves. Even then, to Europe, he studied the European systems, and he came back with just 2 words. The results of his inquiry was in 2 words: find Raiffeisen. That is the model in which India ought to base its entire credit cooperative models. That was the way it was. 1894 marked the dawn of the restructuring and reform of rural finance in India, something that we don't really read about because we always read post-independent history. But please, we must know that history matters in these things. Just 5 years after the passing of the Credit Cooperative Act in Germany, India adopted this. And in 10 years later, in 1904, the Cooperative Credit Societies Act was passed in India, laying the legal foundations exactly the way we envisaged in the German system for a new system of rural finance in India. Excellent, wonderful. Within 20 years, some 50,000 credit cooperatives came into existence in our country. The credit movement rose very well in this country in the British Raj period, and then fell drastically. And that's our question. Remember, and then studies on this is not my own independent research, but studies on this said that the lending rates of interest were in the range of 9 to 12%, something which formal credit institutions are asked to do today in India. It's far below that of the informal sector, the money lenders, 30% and 25% kind of things. The downturn, what went wrong? This is where I contrast the German trajectory of finance to the Indian one. One major difference from the German model: the establishment and expansion in India involved the government as an active participant and promoter from inception. In Germany and many other countries such as that, the state was not part of the movement. It entered only in due course upon the request of the movement to provide a legal framework. The state was kept away from these credit cooperatives. Unfortunately, we did not follow that process here. The establishment of a central bank, the Reserve Bank of India, in 1935, opened the floodgates of a generous government supply of financial and human resources. The RBI was like Mr. German giving fish to the, we are here for the poor, so we'll do anything to. What did it do? It created perverse incentives. What happened was, from there onwards, the number of loans overdue in these credit associations grew very rapidly. It's exactly the kind of point that I was making before with the fishermen. Then came the ideology of central planning in our country. Remember that we adopted a socialist ideology. The Nehru plan was based upon socialist kind of thinking, where we thought that equity and distribution is more important than any kind of efficiency. And therefore, what the ideology of central planning did was, it kind of assumed control over all these institutions, including cooperatives. Instead of staying out of cooperatives, the state took over the cooperatives. It proved to be fatal. Governments then was alienated from the local communities to them and its members to government officials. Once this happens, this disjoint, let me tell you, ladies and gentlemen, is one of the crucial things that broke the back of credit cooperative movement in this country. State governments were given full authority in matters such as appointment of chief executives, suspension of elected boards of directors, amendment of bylaws, vetoing of bank decisions, issuing of directives, and supervision. This was not the German model at all, right? The government intervention and loan channeling replaced the original system of self-management and self-reliance. The two twin, very important aspects of the German model were completely bypassed in this kind of a situation. And look at the Rangarajan report. An increasing realization of the disruptive effects of the cooperative, of the state patronage and politicization of cooperatives, especially financial cooperatives, resulted in poor governance and management and the consequent impairment of their financial health. Well, we have come a full circle now. We started with the German model, we move away from the German model and then realize that we are doing the wrong thing here, and then the system became borrower-driven and the concept of mutuality and self-reliance was completely lost. What are we doing about this kind of thing? The lessons from Germany? One of the important things is research today is going on the financial reforms. And guess what? The German cooperatives and the Raiffeisen Association is among the agencies that are providing technical assistance to restructure our legal system in terms of the cooperatives in India. So we are trying to get back to a throwback to the German models. And what are the principles that we are trying to bring back? And this is not happening only in credit. It's happening in forest management. It's happening in so many other things. We take away the property rights of the locals and now we are giving it back to them. Joint forest management as if it's something new. So principles of self-help, individual responsibility, self-governance, which has to be backed by prudential regulation, but not intervention. Regulation does not mean intervention always. States do not have to play an interventionist role, they can play a facilitative role. And the legal system of microfinance in Germany did exactly that. It played a facilitative role, it did not intervene in the decision making and the decision process and the auditing of the credit cooperatives in Germany. When we talk about state, and state playing a role, we automatically think that the state must take over all resources. That's not necessary. State intervention has to be of a particular kind. We are now changing towards this kind of a system. And a legal framework that protects the individuals. This is still not in place in this country. This has to be incorporated into the microfinance models, which may result in a better future for the financing of the rural sector. So what we have to do is go back, look at the kind of microfinance principles on which the German system was based, and try to understand how indigenous groups being given the power to audit and rule themselves, self-governance, create self-enforcing contracts because it's in their own good to matter to these contracts. And if we can bring that kind of a legal reform of our financial system into this country, then we will be in a much better position to finance the rural sector. I think that's about some of the references I have given here. People's Banks or Use and Value of Cooperative Credit. NABARD has got a lot of literature on this kind. NABARD is the National Bank for Agriculture and Rural Development. You all know this. I think NABARD has a thing in this thing also. So I'm just gave you a snapshot view of how things were in Germany and how things are in India, and how microfinance is not something that stemmed suddenly from the Grameen Bank concept at all. It existed long, long, long back. Thank you.